2. Have you ever heard someone say, Forex is dangerous? Or I lost my whole account in one day and wondered how that even happens? Very often, the answer isn't a bad strategy or bad luck, but a deep misunderstanding of leverage. Leverage is one of the most powerful tools in Forex trading. And at the same time, one of the most dangerous if you don't understand it. Today, I'm going to explain leverage in the simplest way possible. So, you can finally understand how it works, why it exists, and how it can either help you grow slowly or destroy your account very, very fast. If you've ever felt confused or even scared when hearing numbers like 1 to 100 or 1 to 500, stay with me, because this video can save you from some very costly mistakes. Before we continue, if you're serious about learning Forex trading the right way, take a moment to like this video and subscribe to Forex Trading Rocket Signal. This channel is built for beginners who want clear explanations, honest education, and real understanding instead of just hype. Subscribing now helps you stay consistent and not miss important lessons just like this one. Alright, let's start from the very basics. Leverage in Forex simply means borrowing money from your broker, CO. You can control a larger trade with a smaller amount of your own money. That's it. There's no magic to it. If your broker offers you leverage of 1 to 100, it means for every $1 of your own money, you can control $100 in the market. First, this sounds absolutely amazing. It feels like leverage is giving you free power, free money to trade with. But here's the critical part that so many beginners miss. Leverage increases both your profit and your loss equally. It does not care which direction the market goes. It only magnifies the result. This is exactly why leverage is called a double-edged sword. Let's imagine a simple situation. You open a trade without any leverage, and the market moves 10 pips in your favor. You make a small, nice profit. But what happens if the market moves 10 pips against you? The loss is just as fast and just as strong. Leverage does not protect you. It exposes you. This is the trap where so many beginners get caught. They think leverage makes trading easier, but in reality, it just makes mistakes much more expensive. At Forex Trading Rocket Signal, we always say this very clearly. Leverage is not the problem. Misusing leverage is the problem. So, let's talk about why brokers even offer leverage in the first place. Without leverage, most regular people would not be able to trade Forex at all. Currency prices move in very small increments, and leverage is what allows retail traders to participate meaningfully in those small moves. So leverage itself is not bad. It's actually a necessary tool for the market to function for people like us. The real danger comes when traders use way too much of it without a solid understanding of risk management. Another incredibly important thing to understand is that leverage and lot size work together. Leverage controls how big of a position you can open. But your lot size is what controls how strong the impact of that position is on your account. You can have very high leverage and still trade safely if your lot size is small and appropriate for your account balance. This is why blaming leverage alone for losses is a fundamental mistake. For example, with 1 to 100 leverage, you only need 1% of the total trade size as margin. This makes it easier to open trades. Professional traders use leverage as a calculated tool, not as a temptation. They focus on protecting their capital first, not on chasing fast money. Emotionally, leverage changes how trading feels. High leverage makes every small price move feel intense and dramatic. You start watching every single tick, every candle, and every tiny pullback feels like a major threat to your account. This environment leads to panic decisions, closing trades too early, and revenge trading after a loss. When leverage is used wisely and conservatively, trading feels calm. You give the market space to move, and more importantly, you give yourself the mental space to think clearly and make rational decisions. If this explanation is helping you so far, this channel is here to help you trade smarter, not just harder. One of the biggest myths in Forex is that higher leverage automatically means higher success. I want you to remember this simple idea. Leverage does not change the market. It only changes how the market affects you. Used correctly, it gives you opportunity. Used incorrectly, it amplifies your mistakes until your account is gone. In our future videos, we'll connect leverage with lot size, stop-loss placement, Before you go, I'd love to hear from you. Leave a comment below and tell me, what leverage do you currently use? Or are you still feeling confused about choosing the right one for you? Your feedback helps everyone in the community. And if you found this video helpful, please share it with a friend who is also learning to trade Forex. It could literally save them from blowing their first account. Thank you so much for watching. Keep learning, stay disciplined, and I will see you in the next video.